and understand that those missiles, they can't be shot or guided by Ukrainians. The only people who have the ability to guide those are Americans. So basically, that is the United States firing on Russia. And when I say it was an FAFO moment, Putin's response was to fire an intermediate range missile that just so happened to be hypersonic. And that's the first hypersonic real, not a test. It's a real use of hypersonic missiles.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we have opened up another week of trading. And obviously, as I'm sure you're well aware by this point, on Monday we had quite a beatdown in both the gold and silver markets. Amidst a lot of things happening, we're getting some clarity on what Trump and his administration is planning to do, especially we're seeing some of the cabinet members be selected. And of course, really some escalation in the Russian, Ukraine, U.S. conflict. A lot to dig into. And fortunately, joining me here is my dear friend, Bill Holter. Bill, great to have you back on as always, especially right now. I know these are things that you track quite closely. So pleasure to have you in here today. And how are you, sir?
Good to be back. Thank you, Chris.
Well, good to have you here. And let's dig right in because obviously about a week ago, Joe Biden or whoever is running the show gave the authorization to use U.S. missiles in Ukraine. Didn't take long for them to be used. And a lot happened over the weekend. And perhaps I'll just let you take it from there and let people know what they at least should be aware of right now.
Yeah, I think you can look at that as a FAFO moment. For the U.S., Britain, France, basically NATO, to allow Ukraine to fire missiles, intermediate missiles inside of Russia, and understand that those missiles, they can't be shot or guided by Ukrainians. The only people who have the ability to guide those are Americans. So basically, that is the United States firing on Russia. And when I say it was an FAFO moment, Putin's response was to fire an intermediate range missile that just so happened to be hypersonic. And that's the first hypersonic real, not a test. It's a real use of hypersonic missiles. And I mean, years ago, 4, 5, 6 years ago, I used to do podcasts when I was partnered with Jim Sinclair, and he used to always say, well, about hypersonic, if you can't catch it, you can't kill it. And what Putin just did was put the world on alert that Russia's military is the biggest, badass military on the planet. I mean, they have weapons we don't have. They have weapons we can't defend against. I mean, they could hit anything anywhere in the world, and they know it's going to hit because it can't be defended against. So for the markets to be doing what markets are doing now, I think like everything is backwards. Everything is upside down. I mean, there should be panic. There should be fear that, oh my God, the United States is no longer the biggest, baddest bully on the block. NATO basically has become irrelevant.
Yes, and at least as of Monday, we can see the panic or fear seems to, at this point, be in the gold and silver prices. Interesting, you do see stocks up, dollar also down, although we'll come back to that in just a minute, get your thoughts on the Monday price reaction. Yet something else that I'd love to get your opinion on, obviously reports of what is actually going on in Ukraine are mixed depending on the source. From the people that I check in with and listen to, it seems to me that there's a strong impression I have that Ukraine is not going to win that war regardless of whether the U.S. sends more money. You talked about the weapons advantages. I hear reports on an increasing basis that It's like if we want to go to war against China, we need to ask them for parts to build the weapons, and that really
Right.
there's been some flaws exposed in the capabilities here that I guess more specifically though that regardless of what decisions are made that war in Ukraine is not being won, so it's really a matter of how much more life and resources are going to be poured into something that seems very unlikely to change the ultimate outcome. Is that about right? And anything you could add to that?
Yeah, there's nothing that's going to change the outcome. It's done. Um, Basically, was a grinding war of attrition. I mean, Russia is not going to back up, and they're not going to be backed up. Your comment on if we were to get into anything with China, the biggest thing about China would be the strategic metals that they have basically 100% control of, and we can't build weapons without them. So, and I mean, look at what we've done. We've basically depleted our ammunition stockpile. We've completely emptied the SPR. So, I mean, it's almost like over the last couple of years, the Biden administration has been tying our hands, arms behind our back for any future type of conflict. Not to mention that we got a bunch of generals that wear skirts and high heel pumps, but that's a whole nother story.
Yes, I could only imagine your thoughts on that, Bill. Last one on Russia. Again, it don't want to unnecessarily speculate, but just the timing of right after the election, Biden, we haven't heard a lot from in the past couple of months, leaving many people wondering who is really calling the shots here. But, with about 2 months left, making this decision, I wonder what Putin is sitting there thinking. Is he just saying, I hope these guys don't do something too wild? It seems like he's able to have a conversation with Trump, whereas he mentioned he hadn't talked in the Tucker Carlson interview that he hadn't talked with Biden in 2 years. Do you think he's just sitting there like, I hope they don't go too overboard in the next 2 months and we can make it to there? Or what do you imagine that's like?
Yeah, there's a couple thoughts on this. Uh, One, Biden is trying to get World War III started before Trump can even get in, so he inherits World War III. Uh, Another thought is, I mean, if there was global conflict and you had nukes being lit off, around the world, would there be a transition of power? Would they cook something up saying, "Well, yeah, we'll install you, Mr. Trump, once things calm down, but we're in the middle of it and we can't change, the succession of power or whatever." I mean, Putin obviously has to be thinking that Trump is a guy that he can talk to.
Mm-hmm.
Trump seems to not want war, so hopefully, uh, Putin, Russia remain. I don't know if the word is tolerant or not, but uh, they don't come back with any real severe response between now and when Trump gets in. And let me just to clear things up. Um, the picks that Trump has put together for his cabinet, and I posted this, I think, on Thursday or Friday, and I had hopes, just like a lot of people still have hopes that Trump's going to come in and clean things up and blah blah blah. But if you look at his cabinet picks, I mean, this is like it's deep state all over again. I mean, the Treasury Secretary, where are his roots? George Soros. Then you got, I think it was the head of the FDA, the lady, who still proposes masks and thinks that the vaccine is a good thing. I mean, Trump needs to come in and say, I screwed up. But you're not seeing any of that. And you're seeing a bunch of his picks have some very serious deep state ties. So for people to hope that he's going to come in and clean, drain the swamp, I don't know. I'm highly skeptical at this point.
Well, I understand you, and we'll see, obviously, with RFK involved, where things on some of those topics that we won't mention too much on the platform
We'll see.
here, where they shake out on that. Although, Bill, as
Yeah,
I
I'd
know,
only be your first strike, though. I
yeah,
would
well,
only be your first strike.
well, I might add, you were in one of the videos that we got kicked off for a week. This was back in 2022. So one of our strikes, I give you partial credit, Bill, and I know you're proud of that. Can put that on your resume for
Oh,
your clients. And
I'm adding you to the list. I mean, I was a strike, one of Greg Hunter's three strikes, one
yeah,
of X-22's three strikes, one of Sean at SGT's three strikes. I
wow.
mean, I try to be helpful.
I feel like I'm in a Hall of Fame diversified portfolio. So wow, this is special stuff. Yeah, and since we're making this history, Bill, I don't know if we're going to get into historical territory in terms of down days and gold and silver, but again, we're recording on Monday, and certainly a bit of a sell-off. There's silver down 3.5%, buck 11 or 12, let's call it. Gold down $95. That's one of the bigger ones I remember in the past couple of years. And before we get your perspective on that, just one other thing I'd like to add in, which I'm guessing you probably saw already, but for anyone at home watching, this is last week's COT report. We see there was some more short covering in silver by the banks here, short covering by gold, the banks in gold as well. And anyway, Bill, any thoughts on the sell-off we're seeing on Monday?
Yeah, well, and you're for sure you're seeing, uh, now that they've had, I mean, silver gold went straight down off the open. They've not been too weak after that. I think gold was off maybe 70, 75 bucks. It's down another $20, and silver was like down a buck, so it's down another 10, 20 cents. But I think for sure you're seeing some covering here. And I mentioned to you before the call, uh, just to pull that chart up on gold. If you look at gold, if you look at silver, if you look at the HUI index, you look at the bottom right hand corner, if you could scroll down a little bit so people can see it. There you go. Right there where your cursor is. It looks the same or very close for silver. The HUI actually had started to cross over on Thursday and Friday to the upside. Once the MACD crosses either upward or downward, then you get momentum players coming in. So the thought process in my mind over the weekend was, okay, let's see what happens on Monday, because even if it's a flat day, these MACDs are going to cross over to the upside, and you'll start to get momentum buyers. Well, they can read charts just as well as I can, or you can, or any of us can. They saw that happening, and voila, a dollar plus on silver, almost $100 on gold, and that's not going to negate the crossovers, but it will delay them. Maybe delay them 3, 4, 5 days. Maybe delay them. If they've got a little bit more powder to get gold down another $50 or $100. They could delay it for a couple of weeks, but that's all they're doing is delaying it. Because if you look at just the basic chart itself, this thing, I mean, gold has been an absolute tractor in first gear the entire way up. So, first off, yeah, were we due a correction? Yeah, we're due a correction. We no longer were overbought. It looked like we were bottoming, and now it looks like they're trying to delay the bottom. But the bottom's going to happen nonetheless. And I think by year end, you'll see new highs on gold. And I'd be pretty surprised if you don't see silver at least sniff 35, if not go through it.
Okay. Well, I know that would make some people happy, and we'll touch on a few silver thoughts before we wrap up. Now, Bill, you saw me. They made me disable my pop-up blocker here. I don't know what they're targeting with us here. We got the AARP, K Jewelers, at least promoting gold and silver as we're going along here. And you did also mention the short positions. Here's the bank short position, which, as I've talked about a bit on the show here, and I think you've seen as well, we did reach an all-time high in terms of bank shorts in gold, which has come in a bit since then. So it was over 250,000 contracts. Now we're down to 192. Similar in silver, we did get more short in 2016, but aside from that, we would have been at a record. And similar, there's been some covering. I'm wondering what you would say when you see short covering like that as a takeaway. My perspective is that it doesn't necessarily mean, hey, the sell-off is over, but certainly they're providing bids at a higher level, which may be one way of saying it is that the chances that the next sell-off in gold brings us below 2,000 or silver brings us below $22 when you see short covering an extreme like that becomes less likely. Is that a good way of phrasing it?
Yeah, I don't think you're going to see those levels at all. I mean, you're looking at those are COMEX positions, and we're very very close to COMEX and LBMA becoming irrelevant because gold and silver, I mean, they're global assets, and you have global players buying the crap out of both gold and silver. Not so much silver, from a central bank standpoint, but what was it, 2 or 3 weeks ago? Russia stepped up and they said, well, yeah, we're going to start buying other commodities. And I think silver was the first one that they named. So it's not going to take a lot of money in silver to really upset that market. And you're talking about, that whole thing with the COT, commitment of traders. Those are paper positions. And when this game ends, paper is going to be meaningless. And I've said this for 10 years, that there is a scenario, and I think it's more likely now as time is going on, there is a scenario where you could see the paper gold price get absolutely slaughtered and go to $10 an ounce, offered, no one willing to buy. And then in the physical markets, you could see gold at $10,000 an ounce, but you can't buy any because there's not available. And that's the dichotomy between paper and real metal, because these buyers globally, they don't buy COMEX contracts. They don't buy LBMA contracts. They buy ounces and they say, deliver me my stuff.
Yep.
So we're getting much, much closer to that, Chris.
Well, I hear you. I'm not sure whether I do or don't want to be doing a show the day that COMEX gold goes to $10 and the actual price is 10,000, but we'll touch on something along those lines in just a moment. Although, quick silver question for you. Going to pull our chart back up here. Now, if you lump this one into one big peak here in the 2011 to 2012-ish range, and then you have that one there, this is only the third time we've been here well above 30. We had a couple minutes in 2021. So, A, do you think that now the other two times silver did go to the $49, $50 area? So, A, do you think that we are heading there in the near future? And I guess the second part, maybe you can tack on when you're done, is what actually caused that spike in 2011, in your opinion?
2011, I'm trying to remember, I think it was Bear Stearns that had the massive short position, and then they were taken over by JP Morgan. And I think that short position had to ultimately be unwound. I mean, they were taken over in 2007, 2008. It sat on their books. And I think the decision was made that they had to cover it, and they knew they couldn't cover it at, the $15 pricing or whatever it was at the time, $12. So I think really that was a function of shorts being unwound. And if the shorts hadn't been put on by Bear Stearns in the first place, you would have seen the $50 silver before 2007 because they retarded that move. And here we are now. I mean, we've had, a couple months now where silver's been above $30, and it's chopping between the, 29 and 35 level. I think the longer it chops here, the more it tells you it's going to go through that 35 level. And once through 35, I think you could see $50 pretty quickly. And that'll be the third time that we've hit. I mean, we got to go back to 1980 for the first time. The second was 2011. And now the third if we got there again, it'd be the third time. I, this is technical analysis. And when the shit is hitting the fan, technicals mean nothing and fundamentals mean everything. And the biggest fundamental is if you got buyers that are trying to pile into silver, yet the silver doesn't exist to deliver, guess what? Technicals mean nothing. $50 might as well be $1. Who knows? But that could bring your launch where you're going to see $2, $5, $10 moves per day in silver, and ultimately reset the price or the pricing, because the pricing mechanism will then become the cash markets as opposed to the paper markets. And the cash markets are real buyers and sellers, and the paper markets are a bunch of Picassos trying to paint the chart.
I like it. And Bill, just to be clear, in that fan shit hitting technical analysis you gave, was that to the second or third decimal place that we're quoting on that one?
Oh, probably the fifth.
Okay, excellent. Another thing that you mentioned in there was the precious metals exchange that Russia talked about coming out of the BRICS summit. I've wondered, now I'll be clear, I've not heard Russia or any officials say this, but just to the degree, if we do go to this path where half the world is looking a bit more towards gold, you also have conflict going on. It seems like some of these strategic metals would be an area of vulnerability, and at least according to the USGS, in terms of reserves, we see two of the top three. Here's Russia at 92,000 tons. You have Peru at number one, 110,000 tons. And I mentioned Peru because James Anderson did a great video over the last Friday about how they're doing deals. China's doing deals directly with them. We've also heard of it, this U.S. dollar-denominated Chinese bond. And you have Australia in second place. But here's two of the three largest reserves of silver in countries that seem to be aligning with the East. So any thoughts on that, and whether you see that being an area that's targeted, and anything else on that?
Yeah, we could talk about that, but I think that's not as important as the existing supply and demand deficit. I mean, if you look at the true uptake or use of silver in just solar panels alone, that's roughly 50% of global production. I mean, the supply and demand numbers, we've been in a deficit, what is it, the fourth year or fifth year now? So I think that is more of an immediate threat than, what you put up here. This is like future stuff, because the world is picking sides, East and West. And it's clear the West is losing power, and the West is not going to be calling the shots in the future. And the East is telling you that gold and silver are both monetary reserves.
Yeah, well, we certainly have seen that playing out. Although, Bill, if we take a step back to the West, I've been excited to get your take on this one. So I will pull up the tweet here that from Ron Paul. Elon Musk has asked me to advise the new Doge board, and he would love to help bring sanity back. We heard JD Vance say that he's coming around to Ron Paul's assessment of the Fed. And as you mentioned before about Besant, now the new Treasury Secretary, and favors gradual tariffs, deregulation to push American businesses and control inflation, a revival in manufacturing. And that's something we've heard quite a bit about. And although you have the idea on one hand, cost cutting sounds great, yet under the current debt load and the other dynamics, you have a problem there. I'm going to play about 40 seconds of something Luke Groman recently shared in terms of how some of these things could work, and then I'd love to get your opinion on that.
Happy subscriber here. Can you explain the dynamics of a gold revaluation, how that would work with buying treasuries with the proceeds? Wouldn't they have to keep buying gold in the open market to maintain the price and therefore borrow more? And additionally, on gold repricing, wouldn't the effect be similar to QE? In theory, yeah, it would essentially be like QE, except there wouldn't be a debt swap, as Bernanke, I believe, called it. It would be straight cash printing, creating money over the back of the gold, buying back treasuries with the dollars. So it'd be straight money creation, much more inflationary.
So, Bill, in the context he's saying that, he talks a lot about how you actually could bring manufacturing back here, but basically inflation is baked in. Now, if you in some way cut down the debt to GDP, then that makes certain things that you don't have to necessarily destroy the banking system. And gold sits out there. He talks also in this clip about how in the Fed accounting manual, they have the ability to call the Fed, or the Fed can be called by the Treasury and have the price of gold certificates reset, which we heard them talking about in that strategic Bitcoin fund. Obviously, we'll see when it happens, but do you think we will go down that path in an administration that has ties to Judy Shelton, who's talking about gold, and Ron Paul? Any possibility of that in this term?
Yeah, I was going to bring Judy Shelton up on my own, but I'm glad you brought it up. Um, she just did an interview last week, I believe, with David Morgan, and talked about revaluing the gold. And what is the number? 700, $800 billion worth of gold. Uh, the bottom line is, and I'm not talking about any specific person, I should just say the whole thing is full of shit, because that's assuming that we have 8,300 tons. Do you assume that we have 8,300 tons? I assume we absolutely don't have 8,300 tons. We've not had an audit since the 1950s. And I would just say, if you know for a fact that they're blowing smoke up your ass about CPI, about unemployment, about absolutely everything, if you've been lied to about everything, why would the amount of gold that the U.S. holds, why would that be the only thing that they're telling the truth about? That's the first thing. I mean, we don't have the gold to do it. So, assuming that we do have the gold, which I assume we absolutely do not, but assuming we do have the gold, so what? You're not even talking about $1 trillion worth of gold. You're talking about a $200 trillion debt problem in the United States. Are they going to actually revalue? Are they going to revalue gold up 200 times? Are they going to turn it into a half a $1,000,000 an ounce? Is that what they're going to revalue? Because in order to cover the outstanding debt, that's the type of revaluation you'd have to have. And that's assuming that we have all the gold that we say we have. So if we only have half of the gold we say we have, now you're talking $1 million. We have a quarter of it, it's $2 million. Just do the math off of it. They're all full of shit. They lied to us about everything. The system's a Ponzi scheme. The whole thing's coming down. And yes, gold could save it. You would have to revalue the gold that we actually do have to numbers that are, to this point unthinkable, but they're gonna become reality.
Yeah, well, I feel like you're holding back a little bit on how you really feel on that one, but I guess in the back of my mind is that everything you said makes perfect sense, although that interest is still sitting there compounding. That just went up a little higher. So ultimately, what other choice do they have? I suppose we'll find out. Although, Bill, just to support your premise there that we get lied to a lot of things on the central banking world, I actually did have a clip pulled up from Judy Shelton that I'd love to play just a moment of this here and get your thoughts.
And I recall in Paul Volcker's final book, Keeping at It, The Quest for Sound Money and Good Government, he said he never accepted from either a moral point of view or an economic point of view the logic of, he said, even low inflation. He said it's still skimming, it's still taking away purchasing power. And I love, he said in the book, my mother would see through that. He meant it's just such an obvious scam that he was amazed that that was becoming a conventional thinking at central banks.
And Bill, I might add, she also referenced how in the Humphrey Hawkins Act, they had this part here, and by 1988, the inflation rate should be zero. Again, provide that pursuing this goal would not interfere with the employment goal. I suppose maybe Fed governors would argue that second premise, but just interesting that the 2% mandate, it's a little murky where that came from. It was supposed to be zero.
Well, I would just say amen to what she just said. And Paul Volcker was telling the truth right there. 2% is still skimming. I mean, why does your money have to become worth less each year? Why does there have to be inflation? The simple answer is because in a Ponzi scheme, you have to pay past investors. The only way to pay past investors is to have new investors create new debt to pay off past investors. So, I mean, under a gold standard, you don't have inflation. You have sound money. If you work for the week or you work for the month or whatever, you square up your books and you have a profit and it's in gold coin. Well, that gold coin is still going to be it's still going to be gold coin in a year or 5 years or 10 years or 20 years. It's still going to have value. It's not going to be debased. I mean, think about it. If you buried a perfect example, if in the year 2000 you buried $270 and you buried 1 ounce of gold, where would you be today? One versus the other. One's worth $2,600, $2,700. The other's still $2,700 or $270, which doesn't buy what $270 bought back then. So
no,
it's a
no, it does
double
not.
win.
Well, Bill, fortunately, our last topic here before we wrap up, I think will put your mind at ease because obviously I know what a great fan of Ben Bernanke, former Federal Reserve Chairman you are. And first of all, I might mention here that a thank you for the incredibly handsome model. As some people know, we created a Ben Bernanke in silver, throwing $100 bills out of his helicopter. But I think the real key part, look at
Here
the
is
handsome
the
model. Look at that handsome guy in there.
Silver Chopper Ben Bernanke.
This was from a couple of years ago. I think you're wearing the same shirt there too. So you look good, look a little younger. Although
this one's a little more starched.
Okay, you're upgrading. I like that. Nice personal growth in that time. Bill, as I was writing a few things up, I was curious, I wanted to check again what he actually said about helicopter money. So I was Googling Ben, and I was shocked at what I found because apparently he was writing a column for the Brookings Institute a couple of years back,
Right.
which he gave a three-parter of what tools does the Fed have left. And I mean, each one is better than the next, but, and I would say we might, even though he's not the Federal Reserve Chairman anymore, it seems like we're on track for these. Because part one, of course, negative interest rates, which I know you're a big fan of. Then part two, he didn't call it financial repression or yield curve control, but we have targeting longer term interest rates when the negative short term interest rates aren't enough. And would you guess what other tool they have left?
A helicopter.
I couldn't believe because here in his own words, and he even puts a quote here. Here's a quote from his book, and he mentions the deflation speech saddled me with the nickname Helicopter Ben. And Bill, some of the comments he puts in there are quite stunning, including here where he talks about they like to call these efforts open mouth operations. So that's from Ben Bernanke. He also wonders at certain points if the new policies will have enough pop and based on how much extra pop they can deliver. So similar to the scientific technical analysis you were talking about before. I mean, some of the things he said in here were just stunning.
What he's saying there about whether it has enough pop or not, what he's alluding to is has the system gotten too big? And when I say too big for not just the Fed, but all global central banks collectively to save? And I think the answer is it is too big. They cannot save it. I mean, with interest rates, being tightened just for a couple of years, the Fed is now insolvent. They've lost all of their equity. You look at the Bank of Japan, you look at the European Central Bank, you look at the Bank of England, the Bank of Australia. They've every one of their balance sheets have gotten absolutely smashed because interest rates have gone higher. The collateral, which was only the head of a needle holding the system up, it's evaporated. They don't even have any equity. They have no equity for that head of the needle holding the system up. I mean, it's like the system is floating in midair with no foundation whatsoever.
Well, that sums it up just about right, and heading right into the holidays. So, although fortunately, yeah. Happy Thanksgiving, Merry Christmas, Happy Hanukkah, and here's your dollar. Although, Bill, I might add
Happy Kwanzaa.
Well, fortunately, Bill, our Silver Chopper Ben Cyber Monday sale, you order before Monday, you can get him in your kitchen before Christmas. So keep that in mind. And I will disagree with you on one thing you said today, that there's no backbone of what's going on here. And that obviously does not include that we have BillHolter.com, where you write about these things on a daily basis. So since we can't have you on every day just yet, people can find you there. And any last words that you'd like to share, or anything you can tell people about the site or how they can reach you if they'd like to get in touch?
Well, yeah, you can obviously go to billholter.com. There's a contact button there. If you want to contact me directly regarding precious metals business, my business email is bholter@proton.me. Yeah, I guess my final comment would be the holidays are going to be interesting, to say the least. I mean, think about your extended family. Think about, anybody's family getting together for Thanksgiving. This country has never, ever, ever, well, maybe the Civil War, but it's never been as divided as it is now. And I bet you there's going to be some real hoots of conversations that end with fights, people leaving. I mean, I'd love to see a video, a video comedy of people meeting for Thanksgiving, meeting for Christmas. You just have a complete dichotomy.
Yeah, well, maybe we could get you to Thanksgiving over at some Democratic households and videotape you and make a movie out of that. Would be fun. Although, actually, Bill, one last quick one before we wrap up that I did want to ask you. One of the themes in silver we've seen this year has been a lot of selling, really over a year now on the retail level. Any changes in that? Any slowdown in that? And any other thoughts on that one?
I just recently had a fairly sizable sale, but that was to purchase a business. And yeah, I noticed this year there's been more retail selling than I've ever seen in, call it 15 years or more. And that is a function of people need money. Yeah. Not big sales. They're not, I've seen a couple, a few, couple $100,000 sales, $500,000 sale, but that's to actually buy, buy property, buy housing, which I don't advise to do that because that's a bubble of bubbles. So, real estate's going to get hammered. But the selling that I've seen this year were pretty much, small, 5, 10, 25,000. People raising money because they needed to live on. They needed to pay their bills. I think that's just illustrates how soft and depressionary the real economy is.
Yep. Well, appreciate that update. And again, people watching at home, you can find him at billholter.com, where he shares things like that regularly. So, Bill, I appreciate you making some time as always. Amazing. We're rounding up 2024 already, but happy Thanksgiving to you, and best of luck to anyone if they invite you to their Thanksgiving table. And or talking about Keynesian economics or anything else like that. But great to see you as always. I know people always love hearing from you, and we'll have to do this again soon, sir.
Thank you, Chris. Happy Thanksgiving to you and yours.